Green Rush, Mining the Energy Revolution with Matt Watson.
Hello, welcome to Green Rush, Mining the Energy Revolution. I'm your host, Matt Watson. This week we have a very special guest. We're going to talk critical minerals investing. We're going to talk uranium, copper, and silver, and potentially what else with the famous Mr. Rick Rule. Rick, it is so nice to finally meet you. This is a long-time listener, first-time caller, so to speak, and this is going the other direction. So thank you for joining. It's a big thrill for me.
Matt, it's a pleasure. The topic that you're addressing has been one that's been of interest to me for a long time. And by the way, I've been a fan and a beneficiary of Kitco broadcasts for a very long time. So thank you for having me back.
Oh, absolutely. So let's just jump right into it. I've been studying a little bit about your background, and the first thing that strikes me about your background is a 50-year career. Rick, my goodness, you've been doing this for a while. I look at your background. Go ahead.
I'm one of these boring guys who sort of decided what he wanted to do in his late teens and never varied. I don't know if that makes me boring or if it makes me disciplined. But the truth is that if you do something long enough, it is likely that you outcompete people who don't have as much experience as you. So I have stuck to one thing, and it's treated me extraordinarily well, Matt. I'm delighted to say if you define work as an unpleasant task that you do to sustain your lifestyle, I've never had to work a day in my life. I've always enjoyed what I do, and it's always treated me well.
There you go. I was cracking up. I was looking back and seeing how young of a picture of you I can get, and Rick, as it ends up, the internet only goes so far back. So you and I both suffer from the same dilemma here. We so could be good that we can dig up pictures of ourselves from way back when. But I'm really fascinated by your investment strategies here as of late. As I said, I've been a student of this. I'm more of an analytical guy. I'm started in the PGM arena. I've become an independent analyst, and I wanted to kind of throw you some of the worldview according to me, and I want you to throw some darts at this thing, pick holes in how I view this. But I think the metals that you're focused on are the fundamentals are just so extremely fundamental. It's obvious, but let's run through it quickly anyway. Rick, in my consultancy, I always throw out a number of different cases, base case and a high case. And as you know, in the clean energy transition, there's a whole series of topics involved these days. That are going to pull copper and silver and uranium, of course, with nuclear. And I try to model these things kind of simultaneously with a whole set of inputs around wind and solar, hydrogen economy related, ammonia, nuclear, the power grid itself. And when I roll up my demands, and I start looking at demands in the context, let's say for a 30-year outlook, I put it in the context of USGS known reserves. And, I'll start bucketing these metals, and the lithium battery metal set, it's been real obvious all along that we were going to hit constraints, right? The nickel, cobalt, and even graphite, I think, are going to be challenged in the base case or in a high case demand state. And yet you're really not picking any fan favorites in the battery metal space. I don't know if you have any comments there. Why not? Why not lithium?
Well, I don't believe that we have had or have a shortage of elemental lithium. What we experienced years ago was a shortage in processing capacity in lithium. In the face of very rapid increases in demand for the material, we had an explosive upside in price as a consequence of a near-term imbalance between producing capacity and demand. That very high lithium price caused the industry to go looking for lithium. Given that they hadn't had to look for it for 40 or 50 years, finding it was an easy task. So the world is now substantially oversupplied, I would suggest, with elemental lithium. Meanwhile, in 5 or 6 years, the bottleneck with regards to refined capacity, particularly in China, has changed. My suspicion is that the lithium market will be in oversupply for at least the next 2 years. And that while the large established lithium producers and the better of the new discoveries will do well over the 5-year time frame, Many of the 300 or 400 junior lithium exploration stocks with deposits that were marginal 2 years ago and are completely uneconomic today will go extinct, and that the best of those deposits will be picked up. I suspect that 2 years from now, lithium will be regarded by investors as a four-letter word because there is no hate as sincere as the hate of a jilted lover. Lithium had such extraordinary narrative associated with it that a lot of people who were attracted to the upside associated with batteries didn't understand the fundamental economics of lithium. And when that hatred really comes to be expressed in the market, which won't be 2024 or probably 2025, but maybe 2026, I'll be on lithium like white on rice. As a contrarian investor, there's nothing I love as much as hate. And the market will continue to express hate for lithium simply because they misunderstood the narrative on the upside.
Right. No, and in previous programs, we've talked a lot, the need for a direct lithium extraction from the brines, with low water consumption, I think is really one of the key technology breakthroughs that's just now starting to pan out, if you will, that's going to enable that market in the future and potentially change the nature of which deposits are going to be harvested, with 60% of the reserves all being in the brines. Nickel and cobalt, though, conversely, I get scared when I look at that. Just from a roadmap perspective, I could see nickel and cobalt dropping off the battery metals list with the next major design turn, which I see as being lithium sulfur based chemistries. And so I could see some of that nickel and cobalt space left hanging there in the very near term. So, similar concern there. Your thoughts on that?
Yeah, let's back up just a little bit because you said something very interesting about direct lithium extraction. Understand that I grew up in the oil and gas business, and I have substantial experience in geothermal too. In those businesses, lithium is regarded as a deleterious element, as waste. And if the technology that, as an example, Berkshire Hathaway, Buffett's company, is working on around geothermal brines, or that Exxon is working on with regards to brines associated with, byproduct from oil and gas, then the lithium business changes very, very, very dramatically. I'm not going to say that DLE, direct lithium extraction, is going to work. I've seen lots of breakthrough technologies that went nowhere. But if it does, the lithium business changes extraordinarily.
Exactly.
I too will not.
And there's 4 trials going on right now, I think, in large scale. I'm good buddies with one of those groups that's driving that technology. And it's not just the DLE, Rick, I'd argue. I think it's the water consumption as well. So a DLE with recycled and low water consumption being, I think, a combined requirement, I think, to scale that technology successfully. But it seems like they're very close to declaring success and really looking at scaling from then on. So I can see the lithium market opening up more in that avenue in the future.
I'll leave the discussion of prospective technology to you. I've been studying extractive and processing technologies for 50 years, and I would suggest that my long-term track record in technology is unblemished by success. So I won't burden your listeners with my technological discussions. Similarly, when we look at the progression of battery technologies, there are 20 or 30 that are being put forward by various high competency groups. And I don't consider myself to be versed enough to comment on those respective technologies. My own expertise has to go with exploration, extraction, and processing technologies. So I'd prefer not to comment on which battery technology may or may not prevail. I'm fairly competent to talk about the supply side. And I would suggest that the nickel market, as an example, in the very near term, is substantially oversupplied, which is why you are seeing sulfide nickel production around the world getting shut in. It's worthy to note that the shutting in of capacity has been for 200 years a hallmark of a bottoming of a market. And I would suggest in the nickel market that the near-term oversupply is really due to two circumstances. The first would be the Russians need cash. The last time we saw the Russians need cash was 1990 and 1991. And when the Russians need cash, they dishoard anything that they have that they can turn into cash. In this case, nickel and platinum group metals. The second reason for the oversupply has been the incredible increases in production from lateritic nickels, particularly in Indonesia, in Sulawesi, and also in the Philippines. I recently flew over southern Sulawesi and had the opportunity to view from the air the incredible environmental destruction that is being wrought by lateritic nickel production. My suspicion is that this form of production will increase for probably a year or a year and a half. But then my suspicion is that the political pushback in both the Philippines and in Indonesia will cause those respective governments to insist on extraction practices that are less environmentally destructive and more expensive. The consequence of that is that I think as sulfide nickel deposits come back into vogue, having been shut down, the tier one nickel deposits, tier one sulfide nickel deposits, tier one defined by me as $10 billion or more in situ recoverable reserves at today's commodity prices, will be extremely valuable assets. But I don't see this market turning for at least 2 years. Similarly, in the cobalt market, while I can't talk about the impact of future technologies on cobalt, what I can say is even before cobalt became a fashion statement around batteries, fabricators as diverse as the commodities acquisition strategist for General Motors told me that if we could deal with the availability of cobalt in a long term, that its utility in, as an example, metallurgical applications for other metals like steel was such that the industry would be willing to pay double or triple current prices if they knew that they had access to supply. Cobalt is held back because it's produced in Congo, to a lesser extent in South Africa, and to a similarly lesser extent in Russia, which is to say that equipment manufacturers and users of cobalt on a global basis, be they Japanese, Chinese, American, or European, are constrained in developing applications for cobalt simply because of access to supply. It's a very, very, very interesting metal, irrespective of its battery application.
Yeah, the use of cobalt in electronics, I think people understate just how much demand there is in semiconductor and electronics writ large. It's astonishing, the number. And I really appreciate you bringing up these ESG issues on nickel and cobalt. It just blows my mind that more analysts and consumers aren't concerned about that, especially in the nickel, these high pressured acid leaching processes. There's so many of these mines in Papua New Guinea and in Indonesia now that are dumping those mine tailings, deep sea ocean dumping. And, what are the repercussions of that in a region known for being in the Coral Triangle, pretty biodiverse region. And you're right, the destruction, it hasn't caught the press like I thought it would. And they're just, I agree with what you're saying, but I don't see the pushback coming from the rest of the world on those ESG issues like you think they would. And for the life of me, I can't come to grips with why. So,
what you're starting to see, Matt, is actually increasing pushback. An example of the place that you see it is in Western China, in Xinjiang, around the extraction of rare earths. For years, the world hasn't explored for rare earths because the Chinese produce them so cheaply. One of the reasons that they produce them so cheaply is the tolerance that the Chinese government had, and until recently the Chinese people had, for unbelievable environmental destruction associated with leaching soils for rare earths. In the last 2 years, both the central government of the CCP and also the region has pushed back substantially over the environmental devastation caused by rare earth productions in Western China. And the consequence of that is that the Chinese are rushing to implement Western standards. They will still be efficient producers, but their cost associated with producing rare earths are going to increase fairly substantially as a consequence of their unwillingness to further abide the externalities associated with environmental destruction. And I would expect that as frontier nations, particularly Indonesia and the Philippines, have the ability to afford higher environmental standards, that they will insist on that. You have to fly over Sulawesi or be present in Sulawesi to understand the extent of the devastation. Nobody looks at me and confuses me with Greta Thunberg. I wouldn't describe myself as a sort of a hysterical environmentalist. But right. When you see strip mining that basically doesn't do deep offshore disposal of waste, but rather just pushes it into the intertidal zone, and when you see earth and mud plumes that extend over many, many, many kilometers, you understand that the people who are going to have to deal with that for the next 2 or 3 generations are going to push back.
So, Rick, again, thank you so much for this commentary from an ESG perspective. God bless you. I wish there were more people like you pushing back. It's a travesty what's going on in the nickel and in Indonesia in particular. You're absolutely right. Well, let's move on to, you brought up the rare earths as well. There's some 4 years worth of known reserves of rare earths, and you brought up the Chinese cost. The way they're doing their production, the West will never be able to compete with them. I have friends that have toured some of the rare earth sites in China, and they're doing sulfuric injection into the hillside just to get a jump on the dissolution process, on the first step in the separation process. And it's just a total travesty where they're dumping their acid tailings in a 6-mile diameter unlined lake out back next to a population center of 2.3 million people. It's just a total environmental nightmare. Do you see anything from the West where people are going to stand up and just proclaim, hey, we need to do this, ethically and correctly, and even at a 20% higher price tag, can we find a home for that material in the West? Do you see any hope on the Earth in fashion?
The cynicism of consumers relative to externalities borne by other people is absolute. Right. So I think that reform in China needs to, and by the way, will come from the Chinese. Right. I've done a lot of business with Chinese investors and Chinese mining companies over the last 30 years. And I'm absolutely convinced that there will be substantial reforms, and in fact have been substantial reforms in the Chinese rare earths industry. The leadership for that will not come from the West. People care more about their cell phones than they do about a hillside in Xinjiang. That's just the way it works. Yeah. In talking about rare earths, too, we need to talk about it in at least 2 other contexts. The first is that rare earths aren't rare. We haven't looked for them, and hence we haven't found them because the Chinese produce them so cheaply. Right. The Chinese are now threatening to utilize rare earths as geopolitical tools in the supply chain. And what that means is that separate and apart from environmental considerations, Western fabricators and non-Chinese fabricators, by the way, Taiwanese fabricators, Korean fabricators, Japanese fabricators, and Indian fabricators are all rushing to secure rare earth supplies that make them more and more immune from economic warfare emanating out from China. We will find rare earth deposits because they aren't rare. We will find non-Chinese rare earth deposits. We will, when I say we, in the West, we will develop refining and fabrication capacity. One of the things that you need to understand in the context of resources is that there is competition by and between various economic blocs, including, as an example, the Chinese on one side, but the Japanese, the EU, the United States, and all of these people are beginning to take geopolitical access to raw materials, including rare earths, into their investment calculation. This likely means that rare earth discoveries of a certain size and scope, whether you believe in government participation or not, will benefit from state-sponsored concessionary financial arrangements, often unavailable in other extractive industries, which is to say that people who make discoveries outside of China, I think, can count on concessionary financing, perhaps from the Chinese, perhaps from the Japanese, perhaps from the Americans. But I think that this is really going to disrupt the cost of capital in a positive way for developers over the next 5 years. I think, by the way, the discovery, again, and development of tier 1 rare earth deposits outside of China will yield truly spectacular rewards to investors who don't need to be involved in the flavor of the month. I think that rare earth will probably stay out of investor favor for a long time. The consequence of that is that if you pay attention right now, you don't have much competition from other investors. And I think that will inure to your benefit if you have a 5-year horizon, which of course I do. Right.
Well, let's move on quickly. I'm going to run through a couple of slides just to set the plate. We'll talk uranium, and then we'll get into the copper and silver. So you look at nuclear. People I don't think realize just how many critical minerals are involved. But everything from, of course, uranium, hafnium, zirconiums. There's about 30,000 troy ounces of silver in most reactors. Lots of copper, high purity graphites, moly, chrome, nickel, manganese. So it's quite an impressive array. When I give my talks, it's amazing how people don't really have a sense of the intended plan for the global power grid. This is a depiction of the actual electricity generation that has occurred, and then a forward-looking forecast. And I'm keying off of inputs from Arena, who say not only do we need to grow our grid some 2x by 2050, we need to grow it globally by some 3x. We need to set aside some significant budget for all these electrolyzers, all these energy-intensive hydrogen electrolyzers. You also need to set aside about 50% of today's capacity going forward. When you have about 1 billion EVs on the road, you're going to need significant charging capacity set aside for that. And so we're looking at a growth in the global grid that is really quite profound. And I think the challenge that I think most regulators are starting to wake up to is the variable nature of wind and solar, which they want to make it some, 70+% of the overall electricity generation. And that variable nature causes a problem. I use California, my home state of California, as an example. If you're not familiar with the duck curve, you can look it up. But essentially, as the solar kicks in, we are generating too much solar on most days, curtailing or turning it off. To the tune of last year, 2023, California, we could tell some 6.5% of all the solar that we generated. That's how much they're turning it down. And nuclear and natural gas, I think, are the quickest responding baseline loads that can respond to this. And so I think there's been a resurgence more in that vein about, hey, why can't we grow nuclear? As you know, Rick, COP28 recently, a pledge from 25 plus nations to grow their nuclear capacity by a factor of 3x between now and 2050. Russia and China did not sign this pledge. I'm not worried about them. They're throwing everything they can at nuclear already. They don't need to sign a pledge to prove they're committed. And I look at the uranium demand as the market's growing and looking at the price. My goodness, is this price climb? Is this over, Rick? Or are we done? Have we exhausted this ride, or is there more to come?
You covered a lot with that.
Yeah.
So
yeah.
Let me unpack it as best I can. First of all, with regards to government pledges on a forward basis,
right.
Governments lie when their lips are moving. And if they're not lying, they're mistaken. That's the nature of government. So I think you need to go back behind the rhetoric to the arithmetic. Right. And I'll give you a couple stats that I think will interest your audience. There are 1 billion people on the planet that have no access to primary electricity. They want it, they deserve it, they can afford it, and over the next 20 years, they'll get it. Right. There are another 2 billion people on Earth with access to intermittent or unaffordable electricity. And I think that humankind will address that too in the next 20 or 30 years. It's worth noting that over the last 40 years, we've raised 1.5 billion people worldwide from dire poverty to the extent that they're just poor. The continued electrification of the world, not just electric vehicles, means that irrespective of the misstatements or false statements by government, that we're going to need more of all kinds of electricity. I'm not anti-alternatives. I've invested in wind. I've invested in solar. I don't want to invest in solar in Germany where the sun doesn't shine.
Right.
We have, because of the political correctness associated with the stupidity of producing electricity where the sun doesn't shine, invested well in excess of $5 trillion over 40 years in alternative energies. Yeah. And the consequence of that $5 trillion investment is that we've reduced the market share of fossil fuels from a high of 82% all the way down to 81%. So people need to put those numbers into context. As you suggest, the problem with wind and solar, except for producing wind where the wind doesn't blow, or sun, or solar where the sun doesn't shine, the problem is intermittency. And you deal with intermittency, as you suggest too, with peaking production of natural gas so that you can support intermittent power when it isn't available and when customers need it. But there is no doubt that the most efficient form of non-carbon generating baseload electrical supply is nuclear. And the consequence of that is that many people who were opposed to nuclear my whole life, as an example, the co-founder of Greenpeace, are now wholeheartedly in favor of nuclear. Given my background, Matt, as a contrarian, the fact that I'm suddenly politically correct, I must admit, has some trauma associated with it. But the truth is, a nuclear future, despite, the opposite. Anyway, I'll leave the politics out of this. Yeah. The nuclear future between now and 2050 is completely unassailable. This isn't something that you have to look to obscure technologies to support. The Chinese are building plants. The Indians are building plants. They're building plants in the United Arab Emirates. Hell, the United States may even get around to building some plants. You don't need to look too far in the future. There's something like 51 plants under construction now, and many plants that were slated for decommissioning are being extended. Minimally, between now and 2050, supply of uranium has to double. Minimally, it has to double.
Agreed.
We're in a production deficit as we speak without 51 plants under construction being completed and 150 plants that are in permitting and financing stages being completed. We are in a supply deficit with regards to our existing nuclear fleet.
So, Rick, let me hit you on the one technology outlook on nuclear that is a bit frightening. Today, most of these reactors are what are called light water reactors. Soon, there's the outlook that we're going to be jumping to fast reactors, and this provides an opportunity for some of the uranium to be recycled and some of the spent materials to be recycled effectively. You can capture about 65% of the material. There's still nuclear waste, but it even offers the opportunity that you could dig into existing stockpiles of nuclear waste and open up a supply. Categories of fast reactors that are under development, you hear about these SMRs, these small modular reactors and micro reactors. What are your thoughts on penetration of these technologies and how this can impact the outlook of uranium? Any thoughts there?
Well, I certainly hope that these technologies prove to be effective to the extent that we can utilize resources more effectively. I think that's a very good thing. I remember 30 years ago studying the problem of nuclear waste and talking to a noted nuclear physicist who, when I talked to him about disposal of spent waste, said, just make sure you dispose of it in a place where 20 or 30 years from now we can get it back because these wastes are going to be a resource. Certainly what we're seeing politically around that, Matt, is the fact that the biggest reprocessors and the biggest fabricators of fuel are, of course, the Russians. And with the politics of uranium being as it is, I suspect that you're going to see the fairly rapid construction and finance of reprocessing facilities and new technologies around that in the United States and Canada. I am not one of those, by the way, who says that the price of uranium has to go up from here. I was one who at $20 a pound said the price had to go up. If you look back 4 years ago, we were making the stuff for a fully loaded cost of $60 a pound, including cost of capital and tax. And we were selling the stuff for $20 a pound. So the mining industry was losing $40 a pound, and of course, being dumb miners trying to make it up on volume. At $100 a pound in the spot market, provided that the structure of the market continues to migrate from the spot or overnight price to the term market, where both producers and consumers can lock in both supply and price, the price that we have today is adequate. The difficulty is that despite the fact that we have adequate prices, we can't ramp up production in the near term enough to satisfy supply over the next 5 years. So despite the fact that we are above the incentive price, the time required to permit, finance, and construct mines is such that there is a real risk of price escalation over the next 5 years. I'm not saying it's going to happen, but there is a real risk of that. The other thing that's happened is that the spot market, which has dominated uranium trade for the last 15 years, has become extremely thin. Among other reasons, because my former employer, Sprott Inc., launched something called the Sprott Physical Uranium Trust, which has now taken 60 million pounds of uranium out of supply and put it in vaults. On a daily basis, as an example, the volume of trades in the Sprott Physical Uranium Trust, exceeds the volume that occurs in the spot market. So one could say that the spot market is becoming the Sprott market. What's important to know about this is that the structure of the uranium industry is changing. Unlike any other commodity on the planet, increasingly in uranium, the transactions will take place on a contracted basis, so that in particular, miners will have a much better sense around uranium than they do any other material, the price that they will receive for their material for as long as 15 years, and the volumes that they'll be allowed to sell. If the counterparty is an investment grade counterparty, a China General Nuclear, a Tokyo Electric Power, a Southern Company, a Duke Company, this purchase contract can literally be security for a bank loan. What that means is the cost of capital in the uranium industry, both in terms of debt and equity, are going lower.
The only other aspect I want to add to the uranium discussion is this AI and the AI data centers. There's some 8,000 plus data centers globally today. They're discovering that these AI data centers, they're going to consume 10x the power when they go into these query and search modes. They just drive a data center just completely active, and lots of heating or lots of aircon going on to keep the data center cool. And so with that, there's lots of discussions about pairing AI, these larger AI data centers of the future, pairing them with nuclear. So in fact, putting them in closer proximity to nuclear reactors. So there's a discussion on copper, silver, gold, some of the PGMs and energy as a whole, including uranium, that suddenly entered the discussion on data centers. And I just don't think the world has a complete grasp of what's coming our way in terms of data center power growth. Today, it globally consumes about 1.5 of the global power grid, conceivably growing to as high as 6% in fairly short order with rapid deployment of further AI centers. So just another potential watch item. I don't know if you have any thoughts or comments there.
I think it's easy to follow the money. You look at Elon Musk saying, show me a good reactor proposal that I can finance. You look at Bill Gates investing very aggressively in small modular reactors. Probably more importantly, you look at the gigantic infrastructure investor, Brookfield, who is partners with Cameco in the Westinghouse acquisition. The idea being that you can pair nuclear power generation with the consumption that will occur across various increases in data processing, including, of course, as you suggest, AI. This isn't anything where you have to rely too heavily on politically correct government forecasts and stuff like that.
Right.
You can simply look at extremely sophisticated investors and what they're doing with their own money and why.
Right. Fantastic. Well, let's quickly run through electrification of everything. Copper and silver, our electrification metals, come along for the ride. For those of you who aren't aware of it, these are the most conductive metals on the periodic table. There's a listing over here that shows the relative conductivity compared to copper, setting copper as the index at 100%, silver slightly more conductive, but gold is conductive material, but obviously quite expensive, aluminum, and then the numbers in terms of performance on conductivity just fall off as you move into other elements and other alloys. So, the purpose of copper and silver in our electronics is so obvious. 75% of copper goes into various wiring products. And it just strikes me when you look at this market. Here's a slide I've shown in a previous interview. The copper loadings in vehicles are creeping up as we move toward higher levels of electrification. The copper loadings, as you look at the grid per se, as you get into renewables, does nothing but increase. And so this renewable push is just an accelerator, if you will, on the copper demand. And you really look forward and you see pictures that are quite scary in terms of demand outlook. Here I show my base case versus my high case, reaching some 50 million tons of demand a year by 2050 or even closer to 60. I don't think 60 is even doable. I question whether even 50 is doable. I think it's interesting that IEA, they just came out with a new critical minerals report where they're saying, hey, 2050, they see copper at about 40 million. And they're trying to account for more design thrifting or design alternatives, getting away from copper using carbon steel or aluminum alloys in high power transmission lines to help reduce some of the load. But still, I think the outlook for copper, like I said, it's just so fundamental. Of course, it's going to grow. And then you just get into a dissertation on how quickly can we develop the mines to meet the demand. And that's really the challenge, is how quickly can you turn the mines? Your thoughts there, sir?
I think that's right. We had two different discussions, and I'll leave some of the demand picture to you because you're a younger guy than I and more facile with technology. The supply side is what I've done for 50 years. And we have underinvested in copper capacity for 30 years, partly because 30 years ago we had too much. There are very long lead times involved in bringing on new copper production. First of all, you have to find it. Then you have to develop it. Then you have to permit it. The truth is that there is nothing that we can do that will increase copper supply for 6 or 7 years. Meanwhile, existing production, for various reasons, is falling. Let me give you two examples. One would be the 7th or 8th largest copper mine in the world, Cobre Panama, completed over a 30-year cycle of discovery to completion for $10 billion, and then stolen by the Panamanian government to suit domestic political purposes. A second example would be the Resolution deposit here in the good old USA in Arizona. 2 billion tons of 1.5% copper. For reference, 1.5% copper is 3 times the average mine grade worldwide. Wonderful deposit in a wonderful location. Central Arizona, around copper mines, power, water, transportation, everything going for it. It has been in the permitting process for 25 years. The truth is that in order to maintain current copper supplies, we need to discover and develop one Bingham Canyon, for reference, the largest copper mine in the history of the United States, every year for the next 5 years. We cannot and will not do it. The only thing that keeps us from dramatically higher copper prices in the next 5 years is a worldwide recession or depression. I'll leave it to you to say if that's going to happen. On the supply side in copper, for the next 5 years, we don't have a chance. We do not have a chance. The average mine grade of copper worldwide in 15 years has fallen from 1.1% to 0.44%, which is to say the average grade worldwide has declined more than half.
Exactly.
We cannot, in the next 5 years, we cannot maintain supply.
Couldn't have said it better. Thank you, sir. I think you're spot on. Let's jump over. Let's talk a little bit about silver. Solar has been in the news quite a bit, and obviously some huge expansions are going on in silver, and really lots of questions about trajectory on how much more in solar PV we're going to be building out. Are we going to build out to the IRENA initially stated targets of 14 terawatts of active capacity, which would be about 32% of the global grid, or do you build it out to double that and even closer to 65% of the global grid? And the resulting demand in millions of troy ounces here on this slope here, if we build it at this rate, you'll hit a peak and the design thrifting will bring the demands down year over year. If you try to push it and double it, it's going to stay, in the 300 million troy ounce a year type of demand. And again, against the backdrop on silver with about 1.2 billion troy ounces annually of supply, so it's 25-30% of the global silver market. Obviously, a key piece of this to me looks more and more assured. And then you toss in vehicle demands, and as we increasingly electrify these vehicles, I worked with Metals Focus, and we were concluding that about a troy ounce per vehicle on average is where we're at with BEVs today of silver and growing. And so, again, I think the demands for the silver very similar to the copper case. It's one where we've had a big step in the solar PV demands that's going to stay. But it's an outlook where silver is just going to be completely underwater. It's going to become an industrial metal, I'd say, by the 2040s. And the outlook here, I think, is really strong. I would also stress the recycle on silver is fairly weak. There's too much silver that's escaping from electronics and solar. We're only recycling 10% of the solar panels. So too much of the silver is a one-way ticket exiting the system. That also does not help our case for meeting total supply. Comments on silver, Rick? What do you think?
Once again, I'll leave the demand side of the equation to a younger guy in terms of technology. On the supply side, it's important to note that primary silver mines only generate 17% of silver supply on a global basis. So increases in the supply of silver as a function of the price of silver are disconnected. To look at silver supply going forward, you have to look at dishoarding from investment demand. You have to look at recycling, and you have to look at byproduct production, principally from lead mines, zinc mines, copper mines, and gold mines. On that front, given the deterioration in the productive capacity around base metals, copper, lead, and zinc, silver supply should be constrained. It's important to note, though, that the emergence of silver as an industrial metal, ex photography, is a fairly recent phenomenon. Nobody knows how much silver there is above ground. Nobody knows, and we haven't known for a very long time, as an example, how much physical silver is controlled by the peasantry in traditionally silver hoarding countries like Pakistan, Bangladesh, India, and Sri Lanka. And it is important in the context of looking at silver pricing, certainly in the next 5 years, to remember that in addition to silver's industrial application, it has been for thousands of years regarded both as a medium of exchange and a store of value. And the near-term price implications around silver, I would suggest to you have more to do with investment demand or lack of investment demand than industrial demand, and they will for the next 5 years. I consider it to be sort of a hybrid metal, which is to say, unlike any other precious metal, gold or platinum and palladium, that silver, as a consequence of its industrial utility, occasionally goes to supply heaven. As you say, silver, as an example that's used in solar panels, is both difficult and expensive to recycle. So literally that supply goes to silver heaven. It goes away. And I remain bullish on silver for many reasons, but mine perhaps are more traditional than yours. I've noticed in prior precious metals bull markets that those bull markets are led by gold. They're led by the fear buyer. And demand for silver only occurs after the precious metals narrative has gone from, if you will, the precious metal investor ghetto to the generalist investor. When the generalist investor comes into precious metals, maybe halfway through the bull market, that demand extends down to silver. And when that happens, the silver price moves both further and faster than the gold price. I understand that's distal to your own industrial materials thesis, but I think that listeners who are listening to this interview in the context of becoming perhaps silver investors or speculators need to know the other side of the demand story.
Right. Fantastic. Okay. Well, I think we covered a lot of ground, Rick, in a fairly short order. I'll leave it to you. Any other thoughts or closing comments that you want to make on our discussion and where this world's headed here?
Well, just one. To the extent that this audience has enjoyed my comments and the way I think around natural resources, I'd love to personalize it. Go to my website, ruleinvestmentmedia.com, list your natural resource stocks, and for no charge, for no obligation, I'll personally rank them. By the way, please, no technology stocks, please, no crypto, please, no pot stocks, ruleinvestmentmedia.com. List your natural resource stocks. I'll personally rank them. I have enjoyed our conversation. I'm fascinated with the implications of technology, both for improving the living standards of humankind and also, of course, for its impact on the industries that I both invest in and speculate in. So thank you for the opportunity to visit with your audience.
Not a problem. Hey, Rick, what's this Rules Symposium coming up in July? Can you tell us about that?
Love to do that. I'm pleased to host Kitco at the Natural Resources Investment Symposium, held July 7 through 11 in Boca Raton, Florida, or via live stream in the comfort and convenience of your own home. I believe this to be the finest natural resources investment symposium in the world for various reasons, including the fact that every exhibitor at this symposium has been vetted personally by me. There are no public company exhibitors at the symposium that aren't owned in my own accounts or in accounts owned and managed by myself. I would note, too, that the proceedings will be recorded. So whether you attend live or live stream, we will give you 60 hours of intensive, valuable programming, more than you can absorb in 4 days. But you'll have the advantage of being able to play the recordings again and again and again. Most importantly, as a consequence of having put on this conference for 30 years and being familiar with the value proposition, anybody who attends the conference, either live in Boca Raton or via live stream on their computer at home, has an absolute gold-plated money-back guarantee. If you don't think that the price that I charged you for admission, either virtually or in person, if you don't think that you got your money's worth, email me. And I'll give you your money back. For 30 years at this conference, the financial risk has been all mine. I'm delighted to say that we have exhibited so much value at this conference over the last 30 years that we have had to refund less than 0.1% of the tuitions that we've charged. Once again, July 7 to 11, Boca Raton, Florida, or in the comfort and convenience of your own home. Once again, every exhibitor is vetted. Once again, gold-plated money-back guarantee.
Fantastic. Well, Rick, it's been truly an honor and a privilege to spend this time with you. I can't thank you enough. Just for our program's listeners, next week, we're going to have back Mr. Bart Mellick. We're going to talk gold and silver and this near-term shift that we've seen going on. So we'll dig into the gold and silver markets next week. Until then, again, this is Matt Watson with Green Rush, Mining the Energy Revolution. Until next time, thank you so much.
Green Rush, Mining the Energy Revolution with Matt Watson.